Welcome to the deep dive.
Hello.
Today, we're jumping right into something pretty interesting in the consumer health tech space.
Yeah, there's been a significant funding round for Mosaic Wellness. We've been looking over the report.
Exactly. Now, Mosaic Wellness, maybe not a household name on its own for everyone listening.
Probably not, but the brands underneath it, I think people will know those.
Absolutely. Think Man Matters, Boywise, Little Joys. That's Mosaic Wellness behind them.
Right.
So our mission today is really to understand what this new money means for the company, obviously, but also, for the broader landscape of consumer health, how it affects you.
And we know you want the key info quickly without getting bogged down, so let's try and distill it.
Okay, let's start with the funding itself then, the headline numbers.
Yeah, the report says they've raised RE 175 crore.
Which translates to roughly $20 million US, a decent chunk of change.
It is, and the lead investor putting this in is Think Investment.
What's interesting, too, is how they've structured it. It's not just a simple investment.
No, it's through issuing compulsory convertible preference shares, CCPS.
Right. 16,279 of them, actually, at quite a high price per share, are as 1,007,500 each.
So for you listening, this basically means Think Investment is taking a stake that will convert into ownership down the line.
Yeah, it shows more long-term commitment than, say, just debt.
Definitely. And this round also gives us a valuation figure to talk about.
Uh-huh. The Entrackr estimate puts the company at around $400 million post-funding.
That's a pretty solid valuation.
It is, and Think Investment's piece of that, just over 5%, 5.04% to be exact.
Which, for a new lead investor coming in, signals, real belief in the potential there.
Absolutely. So maybe we should give a bit more background on Mosaic Wellness itself for context.
Good idea. So they're not that old, actually, founded in 2020.
By Revant, Bhate, and Dhyanesh, Shah, and their model is what they call a digital-first consumer health platform.
Which, in simpler terms for you, means they sell primarily online, direct-to-consumer through their websites and apps.
Like e-commerce, but specifically for health and wellness. Makes sense.
Yeah. Potentially more efficient, wider reach than traditional stores, maybe.
And under that umbrella, you've got the specific brands. Man Matters is probably the most visible one.
Right. Focusing on men's health, skin, hair, sexual wellness, hygiene, nutrition. Pretty broad.
Then there's Boywise and Little Joys. The report doesn't give tons of detail on these.
No, but you can kind of infer, right?
Yeah.
Boywise likely for younger males or specific niches.
And Little Joys, almost certainly targeting children's health and wellness needs.
Seems logical.
Yeah,
So
yeah.
as they grow, you might see more specialized products becoming available for you or your family in those areas.
So this Rs 175 crore, what's the plan? What are they telling regulators they'll use it for?
Well, the filing mentions sort of typically growth, expansion, and general corporate purposes.
Okay, fairly standard language.
It is, but reading between the lines, for you, it probably means scaling up operations.
Reaching more people like you, maybe launching new products you might find useful.
Investing in their tech platform, improving the online experience, that kind of thing.
And it's worth remembering, this isn't their first rodeo with funding.
Oh, definitely not. They've raised quite a bit before this. Over $65 million in total now.
Yeah, the report highlights their Series A back in 2021. That was $24 million.
A significant round. PKV led that one. You might know them better by their old name, Sequoia Capital India.
Right, and Elevation Capital and Matrix Partners India were also in on that round. They were existing investors already.
So some big names in the Indian VC space have been backing them for a while.
Which, again, for you, signals that seasoned investors saw the potential early on.
Exactly. And according to the Credibles data, Elevation actually holds the largest external stake.
Followed by PKXV and Matrix.
So the fact that these early backers are still involved, often participating in later rounds, suggests they continue to believe in the company's path.
Okay, so we've got the funding, the structure, the investors. What about performance? Are they actually delivering?
Well, the financials in the report, especially for FY24, look pretty encouraging.
Yeah. What's the top line growth like?
Really strong. Year-on-year revenue grew almost 62%, 61.7% actually.
Wow. From what to what?
From Rs 206 crore in FY23 up to Rs 333 crore in FY24. That's a big jump.
That is substantial growth. But, growth often comes at a cost, especially early on. What about losses?
That's the other interesting part. While they're still loss-making, they cut those losses significantly.
Oh, really? By how much?
By 37.1%, down to Rs 39 crore. in FY24.
Okay, so growing fast and improving the bottom line, that's a good combination.
It really is. And for you, the listener, that suggests a move towards sustainability. A company getting more financially stable can hopefully offer more reliable services long term.
Right. So let's try and sort of tie this all together. What are the main takeaways for people listening?
I think the big one is the strong investor confidence. You've got a digital-first company growing super fast.
And also showing a clear path to profitability, or at least reduced losses.
Exactly. This funding round basically says, we believe this model works, and we believe Mosaic can capture a big slice of the market.
Which, for you, likely means you'll continue to see, and probably see more of, these kinds of specialized online health brands.
Yeah, it really taps into that broader trend, doesn't it? People like you are just more comfortable now seeking health solutions online.
Convenience, maybe privacy for certain issues, wider selection sometimes.
And platforms like Man Matters seem to be hitting the right notes by focusing on specific needs.
So connecting this to the bigger picture for you, it's an evolution in healthcare access, really.
These platforms can fill gaps, offer tailored solutions delivered right to your door.
And the fact they're getting this level of funding, showing this kind of financial improvement, it suggests this digital-first approach isn't just a fad.
No, it feels like investors are betting this is a permanent fixture in how you'll manage health and wellness going forward.
It does raise questions, though, doesn't it? As these platforms grow, how will they interact with, traditional healthcare?
That's a key question.
Yeah.
Will they complement your doctor visits or start to replace certain aspects? How does it impact accessibility and affordability for you overall?
Lots to think about there. But Mosaic's success certainly provides a strong case study for this digital model.
Definitely. That mix of strong growth and shrinking losses. It's exactly what investors like Think Investment want to see, makes them an attractive bet.
So, quick recap for everyone listening. Mosaic Wellness, parent of Man Matters, Boywise, Little Joys, raised about $20 million.
Led by Think Investment, valuing the company around $400 million.
Money's for growth and expansion. And crucially, they showed great revenue growth in FY24 while cutting losses significantly.
All pointing toward confidence in their digital-first model and its potential to serve you better or differently.
Yeah, it really highlights how important these digital channels are becoming for your health needs.
Absolutely.
Okay, so as we wrap up this deep dive, maybe a final thought for you, the listener, to mull over.
Go for it.
How might this continued investment in companies like Mosaic Wellness ultimately change the way you access and manage your health? Could we see even more niche digital brands pop up for very specific needs you might have? And, what other parts of healthcare might be next for this kind of digital transformation that could affect you directly?
It's definitely a space to watch, constantly evolving.
Indeed. Well, thanks for joining us on the deep dive.